Welcome back to AZ Trading, everybody. This will be another subscriber special video. So let me first say my thank yous and show you guys the poll that I created in the community tab, but this wouldn't be a true AZ Trading video without some technical analysis. So stick around and I'll go through how we managed to capture this bearish move on the British pound GBPUSD, which captured almost or just around 100 points so far. But you guys already know we don't do hindsight replay reviews over here. I can turn on the orders, positions and the executions, and you can see we have our position still running where we've taken a few partials along the way and we've got some limit orders for our final objectives. But first, let me say my thank yous because I'm quite excited. I'm sorry if I don't sound too excited because it is 2 AM right now, but recently in the last two videos you guys have gone absolutely crazy and this video has 13,000 views. Oh my god, 27 dislikes. I'm sorry guys, I'll try to do better. But yeah, besides that, thank you all so much for the support. And earlier today we managed to become a YouTube partner, so now I'll be able to make around $1 per video, which is excellent. And as a little reward, I've made this little community giveaway poll just as a little token of my appreciation. So head over to the community tab and vote on any of these that you like, and at the end of the week on Saturday or Sunday, whichever one is the winning vote, then that's the one that I'll do. But who knows, maybe I'll do the top 2 or the top 3 or all of them. Okay, probably not all of them, but I might do more than one. Alright, that's my thank you message up. So let's get straight into how we managed to find this bearish trade. So the pattern that we used to find this trade was the RMR pattern, which can be a very powerful entry tool. But first, before we even look for the RMR, the most important thing we need to look for is objectives. And when we look for objectives, we look for areas of liquidity, which we know are found above swing highs and below swing lows. And just as an example, so above this single swing high, we could call that an objective, and below this swing low, we could call this an objective as well. But the point is, these two swings are not very significant, and the objectives that we want to look for, we want those objectives to be very significant. So we know that above this swing high, there's a bit of liquidity, below this swing low, there's a bit of liquidity, but in order to find an objective with much more liquidity, we know that if price makes some relative equal lows, or the higher the time frame is, then much more liquidity will be present at that area. So if you have a quick look at this chart, can you find where a very key area of liquidity would be? And if you're looking what I'm looking at, we have these 4 instances of swing lows over here. So there's liquidity below here. This swing low did not take that liquidity, so it generated more liquidity. This one over here did the same thing, created more. This fourth swing created more liquidity. So this entire area, which could be considered an area of support, so this would be that main objective that I was targeting. And just some food for thought, we can see this swing low made quite recently. If we drag this swing low all the way to the left, I'd argue that the liquidity that was created down here was actually not taken from this swing low. So what that means is this area of liquidity is still resting, and it would be more likely for price to want to reach this area because that's where all the money is. All right, so we've got our objective in mind, and a synonym for our main objective could be our bias. So our bias is to be bearish towards these equal lows. So now we can start to look for a bearish RMR. So if we just pretend that we're watching price live as soon as the London open ticks, we have this swing high here. It's not reached, it's not raided. So we keep moving on, we move on. These equal highs are now raided. So after the raid, we look for a market structure shift. We scroll through, and I'll just go onto a 1-minute chart. And as we're scrolling through, we wait for a swing low to break. So we have a swing low over here that's been broken, and this would be called the market structure shift. We could even argue that this swing low over here, as soon as this swing low was broken, this would also be a short-term market structure shift. So if you're staring at the chart and you're very nimble, you could even use this as your shift. And after the market structure shift, we wait for a return area. So if we look at this top market structure shift, we've been presented a gap, and as soon as price retraces into that gap, that's where we can place our shorts. And so this opportunity would be quite hard to take advantage of. However, you can see that price has given us a few more opportunities to enter. We have this gap over here. Price has retraced and hit this gap. And if you look to the left, we also have a bearish order block. So if I drag that order block to the right, we can see that price also returns into that return area, which is the order block. So we could also place a short there. You guys might think I'm pranking you right now because I didn't have an order up here. I didn't have a short at this gap, and I didn't have a short at this order block. So how did I manage to get a position at this area before the market structure shift? I've just zoomed out to a 4-hour chart, and we can see that price yesterday just reached that 4-hour swing high. So as price broke through that swing high, we can call this the raid. Then afterwards, a bearish market structure shift, breaking a swing low over here. And finally, a return area. There is a gap over here. However, it was filled immediately, so it's no longer valid. However, in hindsight, we can see that that area was actually quite precise. But I didn't use a gap in this case. Instead, I used an order block once again. So I used the body and I looked for the equilibrium of the order block, which is just a fancy word of saying the middle point, and that middle point is right over here. So if I drag that equilibrium of the order block to the right, this is where I set my limit order. So you can see that this is quite an interesting case of a higher time frame RMR. And when you go into a lower time frame, there are actually multiple short-term bearish RMRs as well. And so whenever you have these shorter time frame RMRs within a larger RMR, given that you have clean objectives below and a clear bias, these are the types of environments that are higher probability. And just for fun, we can see there's also another market structure shift here and another return area within this gap where price retraces into this return area before dumping to its objectives. I'll go quite quickly with my objectives, but my first partial, I took it off at this swing low down here, taking off 30%, and then at these equal lows, I took off another 30%. And my two final objectives would just be at this regular swing low, and then once again, we have some clean equal lows underneath. So whether price pumps and stops me out at my break-even level, or dumps and hits all my take profits, I'm impartial to whatever happens with my remaining positions. I'll just say a quick message on relative strength analysis, and you know that when I trade indices, I like to compare the NASDAQ, S&P, and the Dow. But in this case on Forex, when I trade the pound dollar, I like to use the euro dollar as my relative strength analysis. So when I compare pound dollar and the euro dollar, if I'm looking to place a short entry, then I want to place an entry on the weakest of the two. And we can do this very simply. I'll just draw a fib from the top of the raid to the bottom of that shift, and we can see that pound dollar retraced just above 62%. And here on the euro dollar, I'll draw the same fib, top of the raid, bottom of the shift, and you can see price has retraced almost to 79%. So the euro dollar retraced much deeper, so it was stronger, and pound dollar was weaker. So that's why we decided to short the Dow. So that's why we... Jesus, I said Dow. Oh my God, my brain. I've been trading the Dow too much. And that's why we decided to long. What am I saying? And that's why we decided to short the pound dollar. And you can see as a result, just by doing a quick strength analysis, Euro USD, if we placed a short there, we'd only capture a small move spanning around 50 points so far. Looks like a little man. Oh my God. It's getting late, I need to go to bed. And because we chose the pound dollar, we have a stronger bearish movement that had a much larger expansion than the one on the euro. Oh, and just another thing I wanted to mention on the euro USD, we have some clean equal lows here. So if we have clean objectives below on the euro USD and clean objectives below on the pound USD, these are correlating objectives, which is just an added confluence if you're looking to short. Okay guys, I'll just turn off all my annotations so you can take a naked screenshot of this chart if you'd like to outline the RMR yourselves. And here's the 1 minute chart so you can outline those short-term RMRs. But I guess that'll be it for this video. I'm going to end up embarrassing myself if I keep talking. I'll be making another video most likely tomorrow, since I've also got another trade that I placed on the indices, which was the NASDAQ. And you can see that this is the trade that we took, but I'll be going through this trade and my thoughts, which are actually very similar to the GU trade, in my next video. Alright guys, once again, final message, don't forget to go to that community tab and vote for your little reward. Thank you all so much for supporting the channel and getting us to become a YouTube partner. I'm very grateful and I don't take any of you for granted. But yeah, if you enjoyed this video, leave a like and subscribe. It makes me very happy. And if you've got any questions, leave them down below. I'll get back to every single one of you. But until next time, take care everyone. Peace.